Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from Kuya Silver, and we're talking about the first production from the Bethania Silver project in Peru. I'm chatting with David Stein, President and CEO of Kuya Silver. Kuya is traded on the CSE under the symbol KUYA, on the OTC QB under the symbol KUYAF, and on the Frankfurt Exchange under the symbol 6MR1. Now, David, we're following up on a news release that came out May 21st, just a couple days ago. As I said, it's first production from the Bethania Silver project. I do want to point everybody to a webinar that took place that I hosted with you and your team back at the tail end of April, where we talked about this move into production at Bethania. It was a very comprehensive update of the plans here, the ramp up, as well as what comes on the back of initial production. But since you had this news, I did want to bring you back on just to summarize all that information for my audience. First, let's get to initial production. This is the very start of it. You have a road to ramp up to an initial target of 350 tons per day, but that is going to take some time. So give my audience a little bit of an understanding of what this initial production profile looks like, please.
Sure. Thanks for having me on. And yeah, obviously very exciting times to be able to announce our first production from the mine a couple of days ago. And yeah, in any ramp up, no matter what the mine, you start off small and then you build up day after day, week after week, month after month. You get more and more production until you reach your capacity or your target rate. In our case, our initial target's going to be 350 tons per day, and we'll reach that in about 12 months' time. So that's our plan right now. I think we're looking at something between 100 and 150 tons per day by the end of this year. At that point, we believe we'll be quite profitable, but obviously at 350 by middle of 2025, it will be I think a pretty exciting operation from a cash flow point of view, and obviously lots of room to grow from there.
So the news release even says initial production is being stockpiled at the mine to be transported in larger batches for milling. This is all part of that toll milling agreement. And it also says production and stockpiling operations for the first processing batch may take a month or more. However, as operations scale, company anticipates transitioning to producing these processing batches every few days. So does that mean right now, David, investors shouldn't expect any sort of revenue or cash flow, at least in the next month or so, and even early on, that cash flow will be generally minimal?
Yeah, that's correct, Corey. I think we'll make a separate announcement when we have that first sale of concentrate, which will be in another month or more, but something like that. And as you said, we just started production, obviously, a couple of days ago, so it will take us some time to build up that first batch to send off to the toll mill. But as our production ramps up, we'll be doing those batches every few days, and that's how the process will go. And yeah, in terms of what to expect, of course, the initial revenue will be effectively going right back into covering costs. And you'd look at some point, let's say between now and the end of the year, we would declare commercial production. So where we would actually start to account for revenue and costs separately. Before that, the convention is that you just deduct the revenue from your costs, from your operating costs when you're in pre-commercial production. So for the next few months, the cash flow will be minimal, of course. And then, of course, it'll grow and grow every month. And by later this year, we'll be, I think, making some nice money off the mine, although with the focus on growing it all the way to 350 tons per day next year.
So can you give us any insights in terms of expected cash flow or just the revenue that you will be making as you ramp up here? And then when do you get to that 350 tons per day level?
On a top line production basis, our plan is still it should be very similar, more or less the same as what was in our PEA that we put out. The main difference in the PEA is more on the cost side, having our own mill, building our own mill, which we are not doing now, and we're deferring that into the future now. We have enough toll milling capacity, we feel, in the area that we can still get up to that full 350 tons per day without having to build our own mill at this point in time, although we do want to do that in the future. on in terms of the top line, number of ounces produced, how much revenue we're going to get, that should be essentially the same as what we had in our PEA. And so you're looking at something that's going to be in the range of 1.2 to 1.4 million ounces a year equivalent, which is going to be mostly silver. Something like 75% of the revenue will be from silver at these current prices. And that's what we'd be looking at producing the middle of next year on an annualized run rate.
Now, with this toll milling agreement or these toll milling agreements, one thing to clarify here is you do still have upside to the underlying silver price, right? If silver goes up, you can make more money. You're not locked in within these agreements to any certain costs or revenues.
Correct. It has no impact on the toll milling. The toll milling really is just a cost for us. We essentially are renting a mill for 3 days or 5 days, however long it takes to process our ore. And that, so it's just a cost for us, and it has no bearing on what our upside is on the silver price.
So, David, what about reinvestment then? If you're not building your own mill, you're not building your infrastructure, what sort of reinvestment do you have to take in this project to, again, ramp up, continue to mine?
So first of all, going from essentially 0 to 350 tons per day will require some investment underground, and that will be done essentially on a monthly basis. So we'll be taking some of essentially the revenue or the cash flow that we're getting from the mine, and we'll be putting it back into the mine, maybe $100,000 one month, maybe $200,000 another month, something like that. So we'll end up reinvesting another a couple of million in the mine between now and middle of next year. And then from there, we'll be basically at our initial run rate, where we would be, I think, at these prices, looking at some significant cash flow, and then look at reinvesting that into growing the project further.
When do you make the call to build your own infrastructure, build your own mill, and get out of toll mining?
I think, to be honest, that can be something we monitor, and we monitor very closely, because it's not just a decision that we make based on the cash flow, but it's also going to be partly on the markets. I think with the silver price being where it is, we're going to have such robust, so our cash flow is going to be so robust. I think we'll be able to potentially borrow some money to build our mill. So the amount of cash that we have to put aside as equity to build our own mill, which, by the way, would probably cost somewhere in the neighborhood of 15 to 20 million, again based on our PEA numbers of a couple of years ago. I think we could get away with putting maybe 5 to 10 million of our own cash aside for that, and borrowing the rest, for example. So that would allow us then to take, because I think we'll have more cash than that. So I think that would allow us to keep doing exploration in the district. And while we're building that mill, which, by the way, would take about 12 months, we'd be able to continue to do exploration in the district and keep growing our resource base. Because ultimately, we want to go beyond 350 tons per day. And I think we're going to be able to justify that very quickly. But we do want to do some more drilling and start showing the real potential of the Bethania districts, both at depth and along strike within the mine itself, and then also all those satellite targets and prospects that we have that could essentially feed the mill from 2 to 3 kilometers away max. We've got so many different opportunities to grow resources here. We've really done minimal exploration at Bethania since we acquired it. So there's a massive opportunity there to grow value. And if we can do that using our own cash instead of having to go back to the market like a normal junior does, then I think that gives us a much better leverage on discovery than anyone else in a similar situation.
What is the exploration timeline going to be? When do you really start exploring? Will you be exploring in the near term? Give us some more insights on the exploration strategy now that you have started mining at Bethania.
Look, we always have exploration work going on, and we will continue to do that in terms of generating targets and getting a better understanding of the zones that we already know about. In terms of drilling, which is the bigger cost, of course, I'd say earliest we'd be looking at doing that would be beginning of 2025. I think we want to make sure that we get the ramp up of Bethania right, and that's going to be our focus for the next 6 months. so that we're making money that we can then reinvest in exploration. And then, I think from there, it's a function of the silver price, how aggressive we get. Obviously, the higher the silver price, the more money we're making, the more aggressive we can do exploration. It's just a matter of time and money at that point in time. The ounces are there. We just need to go out and drill them.
Yes, you do, but it sounds like you have a lot on your plate right now, just ramping up production too, and well, I'm sure you want that exploration in a way self-funded too. So, a couple considerations
Exactly.
there. David, what kind of news can investors watch out for that you as the company will be able to produce so that we can follow along and understand how mining early on production is going and the ramp up schedule if it's still on track?
Yeah, the great question. I think we'll have a number of update announcements over the next few months. I think we'll first of all we'll announce when we've sold our first batch of concentrate, and so that'll probably be the next announcement we make. And then following that, we'll have our Q2 financials, which will have about a month or a little bit more of production, so people can get an idea at that point of how things have been ramping up, especially in the first few weeks. And then from there, again, we'll continue to have some regular updates every quarter, or maybe even more frequently than that.
All right, David, thank you. This takes us through that news release. Again, I'm going to post a link to that webinar that I hosted with David and his team back at the tail end of last month, where he walked us through the presentation and the ramp up schedule, providing a bit more in depth analysis. But I wanted to get David back on here on the back of that news of production starting and now what we can all look forward to in terms of the ramp up and how that money will be allocated. David, thank you very much for your time. Please keep me up to date on this production ramp up, and I'll follow up with you as more questions come in. So please, everyone, keep sending me your questions. David, thanks again for your time.
Thanks a lot. Appreciate it, Corey. Thanks a lot.